GM everybody. How you doing? On this beautiful Friday, May 8th. What a time to be alive, eh? Well, it has been a week, to say the least. But that being said, I'm super happy to be here. We have learned our lessons from yesterday's live stream, and we will not be in and out today. Mark my words. We will have a continuous live stream on the Daily Digital Download. Whew. Well, this week was boring in terms of crypto news, which is good because, as I mentioned earlier in the week, yesterday, I had taken some time off for bereavement. I lost a dear friend to cancer. Fuck cancer. And I was lucky that this past week didn't have a lot of activity going on because we use these daily digital downloads to help create a weekly newsletter. So with all that said, I do think that we had a quiet news week, which is good because we had consensus going on in Miami. We're right off of the heels of the Bitcoin conference that took place in Las Vegas. And markets didn't dump. Markets didn't pump. We're just trudging along. Earlier today, I had a phenomenal conversation with Louis Ivan of Rider Wallet. It was super cool. We talked about hardware wallets competing against the incumbents and just everything and anything in between crypto's main topics du jour of the day. Go listen to that. That was a super fun space. So without any further ado, we have some Coinbase news today. Is Coinbase hot? Is Coinbase cold? Who knows? But Bernstein is saying that despite Coinbase's quarter-over-quarter decrease in revenue, that they are seeing Coinbase as an everything exchange really starting to take off. What does that mean? Well, they're not just providing spot trading. They're also providing, and by they I mean Coinbase, they're also providing access to derivatives, prediction markets, and payments lines, which are beginning to contribute to their revenue. Coinbase's revenue for Q1 came in at $1.41 billion, which missed estimates by 5%. Not bad. Bernstein said weaker crypto markets weighed on both crypto trading activity as well as subscription revenue, as the total market cap for crypto is down bad. And trading volumes are also down 20% from Q4 2025. Folks, we are in the bear market. Nobody wants to trade. Nobody's getting excited about much. The people who are here for the long term, are probably DCAing, dollar cost averaging. The people who are here for the short term sold at a loss, probably at some point since October 10th, since 10/10. Coinbase's spot trading volume has dropped 25% quarter over quarter to $202 billion in the first quarter. I am so sorry that they're only getting 25 bips on $202 billion in trading volume. That being said, retail derivatives are pushing up Coinbase's revenue, more than $200 million in revenue. Institutional derivatives that are tied to the Deribit acquisition have pushed up revenue to $250 million, and prediction markets surpassed a $100 million annualized revenue run rate in March. So, retail derivatives, institutional derivatives, and prediction markets are really driving a lot of revenue for Coinbase. Additionally, the report put out by Bernstein also highlighted Coinbase's efforts to build out stablecoin and payments infrastructure around Circle and Base. It's fitting that we see something nice being said about Coinbase during a time when Coinbase was recently down. Coinbase lost about 5 hours of activity because of AWS-linked disruptions. For those of you who don't know, AWS is Amazon Web Services. This is where the vast majority of your internet activity is hosted on AWS. Fun fact, about 30% of Ethereum's infrastructure, node infrastructure, is hosted on AWS. This is a fun little thing that Bitcoin maxis like to point out too when they're talking about Ethereum's levels of centralization, that 30% of the network relies on AWS for running a node. Anyways, Coinbase restored its trading after suspending order matching and temporarily restricting trading functions during hours of disruption that pushed markets into a sequence of cancel-only and auction modes. Anybody who has been using Coinbase for any amount of time over the past, let's say, 2+ years has experienced a lapse in service. I'm old enough to remember that you knew the crypto market was really heating up, that there was a true parabolic moment of activity when Coinbase went down, because that meant a lot of people were trying to trade and they overwhelmed the exchange. This was happening through 2023, 2024. But it was an old wives' tale back in the day. No, an old joke that you could tell that the markets were hot when Coinbase was down. So it was degraded performance due to an AWS outage. It was increased temperatures in AWS availability zone Use 1-AZ4 within US East 1 region. Glad to see that they're back online. Coinbase is America's #1 exchange. That being said, Kraken is also really hot. And Kraken just listed the tokens for the ecosystem that I work in, the NEO ecosystem. So congrats to NEO and gas token holders out there. If you're American and you use NEO, you can trade on Kraken now. Continuing on to the drama of the week, the Arbitrum DAO has approved a $70 million ETH release for the Kelp DAO recovery efforts, which is worth approximately 30,765.6 ETH, which is being unlocked to the DeFi United initiative. The vote was almost in staunch approval. 182.2 million votes supported the release of the tokens, accounting for 90.96% of all voting power. Around 9% of the voters abstained from the matter. And pretty incredible that the amount of no votes was around 0.04%. Fantastic. Arbitrum is now set to become the largest donor to DeFi United. That being said, there are some legal issues that have arisen, which we covered in yesterday's Daily Digital Download. The transfer is going to likely be blocked in court, restricting the Arbitrum DAO from moving the recovered funds. It is a court order that was put forth on May 1 that was filled by multiple plaintiffs from separate years-old terrorism judgments against North Korea that are seeking to claim portions of the stolen ETH as their own restitution. Gabe Shapiro, a crypto attorney, shout out to Gabe, we follow one another, said that Arbitrum DAO is not allowed to do anything with the Kelp DAO funds for now until a divestiture hearing. You can go back and take a peek at yesterday's Daily Digital Down. Actually, no, you can't, because I messed up the recording. I am so sorry. Long story short, whenever any sort of theft or hack happens publicly that's attributed to North Korea, there's a series of law firms that come after those funds because they've had open cases for one or two for 20 plus years related to terrorism incidents of North Korea, in terms of killing or harming family members or other war-related incidents. And so whenever there's any large amount of sum that is tied to North Korea, these vultures of lawyers come in and stake a claim to those assets. However, while I'm certainly not going to say that families shouldn't be restituted, families should not receive compensation for the harm that a country, that a nation state has done to their loved ones, this ain't it, man. All of these tokens belonged to a crypto wallet. All of these tokens that were stolen belonged to somebody, and it's provable. You can't just take from a class of people, a group of people that had their assets stolen from them, and then in turn steal that and give it to a plaintiff. It's just not fair. In response to the order that came out on May 1, Aave LLC filed an emergency motion in federal court to challenge the ruling, arguing that it was based on unproven speculation that the Kelp DAO exploit was carried out by Lazarus. So expect to see some juicy courtroom drama over the Kelp DAO hack. Moving on, look, Kelp DAO's negative. It had tons of contagion that impacted you and me, Aave, so many others. But this is a story that will continue to unfold, and I want to focus on something positive for once. Finally, Aptos, an ETH killer, an alt EVM, is committed $50 million across its ecosystem. Take a sip of coffee. The $50 million will target first-party products, protocol infrastructure, research, and strategic funding for trading and AI partners. It's set to support what Aptos Foundation sees as the next major phase of on-chain activity. Get ready. This should not come as a surprise to anybody. They'll be focusing on institutional-grade markets and autonomous AI-driven systems transacting at machine speed. Congratulations. Aptos has identified the two killer use cases of 2026. Aptos has added that its own stablecoin market has grown nearly tenfold since 2024, and it peaked at $1.93 billion in February of this year before declining to $1.66 billion as of yesterday. Meanwhile, the network's TVL stands at $270.8 million, down from $1.3 billion recorded in December 24. And once again, in May, 2025. I only bring this up because as we see Optimism cutting staff, as we see Polygon cutting staff, as we see Coinbase cutting staff, Block cutting staff, a lot of blockchain ecosystems are cutting their staff. They're all citing that it's being done for AI advancements. I think that they're just AI washing the fact that they overhired and they don't want to take 100% responsibility. They don't want to be 100% culpable for decisions for overhiring talent into an ecosystem. So amidst not only treasuries going down and to the right because of token prices going down and to the right, we're also seeing staff get cut. So I really like seeing news where foundations are doubling down and announcing how they're going to invest into their ecosystem. Ethereum did this last month, or is it the month before now, with their crops announcement. So that's a silver lining. I've been in blockchain, in crypto since 2017. I've been working here full time since 2018. I have seen my fair share of announcements of foundations stating that they're going to invest bombastic amounts of funds into projects, products, and builders within ecosystems. And I've also seen none of that come to fruition. So while I do believe it is admirable that Aptos is allocating $50 million to invest into institutional grade trading and AI-driven systems, also show me where this money gets spent. In my experience, and I'm not poking at Aptos here, so don't take this as me digging at Aptos. In my experience, whenever I've seen a foundation announce that they're going to spend $10, $50, $100, $200 million, they never do. you never see that amount fully get spent. So I'll take this all with a grain of salt. But that being said, look for the good where you can. And we're currently in a bear market. Institutions are driving adoption. Retail's being left behind. We have no killer narrative. Look for the good where you can. Look for where our technology is going to be invested in and by whom. On another piece of good news, JPMorgan. I cannot believe that JPMorgan is saying good things about Bitcoin after Jamie Dimon for years just absolutely dismantled and shat on Bitcoin as an ecosystem, as an asset, and as a technology. So it really is surreal to be here in 2026 citing JPMorgan for pro and positive Bitcoin news. But here we are. JPMorgan analysts say that Bitcoin is gaining over gold as the debasement trade after the Iran conflict continues to attract inflow, while gold ETFs are struggling to recover outflows. Bitcoin ETFs have seen inflows for a third straight month going into May. It was rough after 1010, let me tell you. This trend is suggesting that retail investors are choosing Bitcoin over gold as a debasement trade since the start of the conflict. The analyst said noting that the debasement trade typically rotates from gold to Bitcoin, where investors buy gold or Bitcoin to protect themselves against weakening fiat currencies, especially during geopolitical tensions or inflation concerns. Anybody who's a Bitcoin lover, maximalist, name it, whatever you want, what have you, we've long been asking to see Bitcoin be treated as an inflationary hedge. And we haven't really seen that. We saw gold just absolutely rip in Q3, Q4 of 2025 going into Q1 of this year. And we saw precious metals really capture historically what we thought crypto would have been able to. So we didn't get to see Bitcoin be the inflation or geopolitical hedge that we thought it was going to be over the past couple of quarters. That being said, I do remember in 2023, during the regional banking crisis here in the US, Bitcoin separated from the rest of the investable markets, commodities, precious metals, equities, real estate, you name it. Bitcoin, that was the first time when Bitcoin was treated as a safe haven asset. When regional banks were shutting down here in the US, people were fleeing to Bitcoin for safety. That's really the only time in recent years that I can remember Bitcoin acting as a safe haven asset. So it's nice to see, and I'm about to shudder, a bank acknowledging that Bitcoin might be starting to capture some of this attention. However, Bitcoin buying is not limited to retail investors. JPMorgan's positioning proxies based on CME Bitcoin futures and offshore perp futures have also been making new all-time highs, suggesting that institutional investors are increasing their exposure as well. Amazing. Here we go. Congratulations to us. On to our second to last piece of news, more in ETFs. Canton has debuted its token ETF. The name of the ETF is... what does it matter? It debuted yesterday on the Nasdaq on Thursday. Canton Network is a privacy-preserving blockchain ecosystem that was purpose-built for institutional finance. It's attracting significant institutional interest given its focus on privacy-preserving infrastructure for capital markets. And the executive vice president of investment management at 21 Shares, which is the entity that launched the Canton ETF, said, quote, "When you see names like Nasdaq, Moody's, and Deloitte supporting a common blockchain infrastructure, you're looking at infrastructure that has the potential to reshape how data and capital move across global markets." End quote. So I think if you go on CT, on crypto Twitter, you'll find a lot of people with a lot of hot takes about how Canton is not a real public blockchain network. Yeah, maybe they're true. Maybe they're right. But that being said, the validators operating on top of Canton are brand names that you know. MasterCard, Visa, several others. So this is an instance where we're seeing TradFi use blockchain technology in a manner that suits them best. We have to start preparing ourselves as retail users, as token holders, as token investors, as token speculators for a world where TradFi and financial institutions are going to be using different blockchain networks for different purposes than we do. And they're here. Like, there is no more mantra, the institutions are coming. When they come, our bags are going to be pumped. No, this is the brave new world that we've entered into. This is the brave new world in which we live. This is the separation of them from us, and they want to use Canton Network. That's just how it is. That being said, we get to have exposure to a potential success of Canton Network if you think Canton Network will indeed do well, will indeed drive revenues, will indeed have lots of users. Then you can get exposed to the Canton ETF or to the token itself. And Canton's native token is a top 20 token with a $5.6 billion market cap. And we'll end today's daily digital download with some Senator Warren news. The only reason I wanted to bring this up, we could bash on Senator Warren. Look, if you're watching this, you don't probably have a ton of love for Senator Warren, or if you're a diehard liberal who votes blue, who's completely to the left, but you love crypto, you probably have some divergent feelings on Senator Warren because she attacked our industry during the previous Biden administration. That being said, I wanted to bring this up because there is deep crypto lore with Facebook, stablecoins, and regulation. Meta is trying to launch a third-party stablecoin in the second half of 2026. This is the second time that Meta/Facebook has tried to launch a stablecoin-related business. In 2019, they tried to launch Libra, which is going to be a stablecoin backed by a basket of commodities, stablecoins, and goods. They got shut down hard. And this was when I believe crypto became mainstream for policy makers and regulators. Because, let me take another sip of coffee, hold on. Because I distinctly remember when Mark Zuckerberg got brought into Congress and was grilled on the stablecoin that they wanted to launch, the Libra project. That was the first time that lawmakers, regulators, and financial authorities got scared about where crypto was going. This was the first time they saw that blockchain technology could be used to compete against the dollar. And they really didn't like the fact that Facebook, one of the largest internet companies, was not only going to be able to have access to billions of people, billions of user accounts, but also they were going to have their own currency. It got shut down hard. But that was the first time that policymakers had to learn about Bitcoin, had to learn about crypto and blockchain, and they had to develop opinions. And so, for better or worse, Facebook made an irreplaceable mark on the blockchain and crypto industry as we know it today, because they forced the conversation on the Hill in Washington, D.C., and they forced our policymakers and our regulators to learn about blockchain and crypto. And here we are, 7 years later, trying to get a market structure bill passed this year. We have a stablecoin bill that got passed last year. We have an administration that ran on a pro-crypto narrative. It's incredible to see where we are 7 years later. And I have a little bit of nostalgia. I have no love for Facebook or Mark Zuckerberg or large centralized entities that maintain access over valuable data of billions of people around the world who want to create their own currency so that they can embolden and then strengthen the grasp of power that they have. I'm not going to sit here and bootlick this entity. But I am going to say I have a little bit of nostalgia for what the Libra time represented and the doors it opened, both for both good and bad conversations. It's just really something else, honestly. We've come a long way. And 2019 was a really scary time because I wasn't sure that the industry was going to be even able to last. 2019 was the depths of the post-ICO bear market, and the only people that were here building were those who believed in the future of this space and of this asset and of this technology. So, yeah, I only wanted to cover this story because it's coming full circle. I don't need a rag on Warren or the letters that she asks people to write or the letters that she sends. Just really pointing out that stablecoins continue to be one of the killer use cases in blockchain and cryptocurrency. And here we are, 7 years later. Facebook is coming back around, and they're still getting grilled in DC. I love it. All right, folks. Well, that will do it for today. For all of those of you who are watching and watch religiously, again, I'm sorry I wasn't able to host the daily digital downloads on Monday, Tuesday, or Wednesday this week. Death is a bitch. Grieving is a process. And I just couldn't think about work with the loss of a friend to cancer. But they were a badass. They would have wanted us all to continue trudging forward and to keep working for the things that we believe in. And so I'm back, baby. We're going to keep these going. Please, please, please go check out the conversation I had today with Louis Ivan. It's conversations like this that remind me why I'm still here. That should remind you about why we still care about crypto and blockchain. Fantastic builder, super passionate, just like completely brought me back. And if you haven't yet, subscribe to The Smart Economist down at thesmarteconomist.beehive.com. It's our weekly newsletter. Again, we missed last week because I got the bad news last weekend about my friend. So sorry that we missed last week, but we'll be back. We're always back, baby. So yeah, look, have a beautiful day. Have a beautiful weekend. Go hug your friends and your loved ones and tell them you love them and spend some time with them because time is a precious commodity. It's the only thing that we'll never be able to have back. So with all that said, go have a beautiful weekend. Go touch grass. Turn off your screens. Go live life.